Hey everyone, welcome back to Chip Stock Investor. Hope you're having a great week so far. We're here to talk about Air products. We haven't done a video on it for quite a while. We have been discussing Air products over on Discord. You can get access to our Discord server via a Semiconductor Insider membership, link in the description below. This company, we said a few months ago that we were going to continue holding even after their LNG business got sold to Honeywell. We'll get more into that in just a moment, but there have been some new developments that we really need to talk about in order to make a good decision on what we should do with our Air Products position.
Okay, so if you're not sure what Air Products does, it is one of the world's largest industrial gases supplier. It competes with companies like Linde and I'm just going to say Air Liquide, based in France. I think it's probably something like Air
Don't do it.
Liquide.
Don't
Air
do it.
Liquide. My French is broken. I'm really sorry. Casey told me not to do it, but I did it anyways. There you have it. There are the competitors for Air Products. Our original thesis for buying a couple years ago was we were looking at different ways to play the supply chain to the semiconductor industry and electronics industry at large in the base materials and gases portion of the industry flow. Industrial gases are obviously, besides just silicon, a key part of manufacturing chips. All sorts of elements like neon gas, for one, that was a big one that we were looking at 2 years ago that Air Products help supply, are a key ingredient in manufacturing chips. But it was almost a two bird, one stone situation for us with Air Products because we were also looking at building a small position in a company that did natural gas and hydrogen, two energy sources that we thought were going to be important in the coming years. And sure enough, those things are becoming important as data centers full of very powerful chips from companies like NVIDIA are looking for ways to power these very hungry AI servers.
But before we continue, quick shout out to the sponsor of today's video, public.com. They have a new bond account that is a great place to stash some of your uninvested cash.
Yeah, it really could be a great place to stash some cash if you are an investor that likes dividends or are just looking for some more passive income into your portfolio. After a recent sell off in the bond market because of newsflash, more uncertainty from the US Federal Reserve and what they're going to be doing with interest rates, you can lock in an annualized yield of over 6% on that bond account over at Public.
Not bad, but that rate is not locked in until you invest. So check out the link below, public.com/CSI. You can lock in your rate at public.com right now for your new bond account. So Nick, you mentioned that Air Products was a leader in natural gas and hydrogen. Explain to us what exactly they were doing with natural gas.
Yeah, so actually, this was a play on the whole liquid natural gas or LNG part of the industry. And basically, all Air Products did was it has this liquefaction technology. Liquefaction is the process of turning natural gas into a liquid. That's where the L comes from in LNG. Here's some pictures of what that technology looks like. These really big looking tubes, centrifuges. There's some coils in there and a lot of hardware that turns the natural gas into not a gas anymore, but a liquid. And usually this happens so that the natural gas can be transported, like, for example, shipped from North America over to Europe. Here's a process diagram from Air Products on how this process actually works, including the parts of the process that Air Products equipment is specifically involved in. But all of that just doesn't matter anymore if you're an Air Products shareholder because this is no longer part of Air Products. This is now part of Honeywell's business.
Air Products finished up the sale of their LNG portion of the business to Honeywell. Honeywell already has extensive natural gas equipment and service revenues, so selling it to them really makes sense. They can definitely do more with this hardware from Air Products. The price tag was $1.81 billion.
And so how does this affect our thesis on Air Products? When we originally wrote about this over on Semi Insider a number of months ago, we felt like, you know what? Okay, this business for 1.8 billion probably got sold for too cheap. They said it was roughly sold for about 13 times adjusted EBITDA to Honeywell on an estimated 2024 basis. Quite the price tag for Honeywell. Pretty good deal, probably, especially given that they already have a lot of extensive work in this field already. But we thought for Air Products, okay, if they have no good path forward for that business, might as well sell it and redeploy the capital somewhere else, like the big hydrogen bets that they've been making. The problem is when we got the Q4 fiscal 2024 update, you can see in this chart on the right, it looks like the business was actually sold for a pretty significant loss, 1.6 billion. So yes, the cash did come in, but Air Products realizing a loss on that sale of the business. So it seems like really all Air Products did was offload a part of the business that was bleeding cash anyways. So all around, probably a good thing for Honeywell. And this leaves some big questions for Air Products shareholders, especially if you were like us and thinking like this is a great natural gas and hydrogen play.
Getting rid of this LNG portion of the business does make some sense. This is management's philosophy. Cash is king. The reason that is because they are going to need a lot of cash to build out their hydrogen infrastructure. And so, if that's the case, why not sell off something that isn't making you any money or you don't want to focus on anymore and put it into something that they are focusing on, this hydrogen infrastructure, which is very expensive. This leads us to our third point, that activist investor Mantle Ridge getting involved.
To the point that Air Products spending is getting a bit out of hand. We'll show you a slide here from our friends over at finchat.io. Link below if you're interested in making your own financial charts like this one. In blue is Air Products cash generated from operations, and in orange is their capital expenditures. Over the last 2 years in particular, the bills have really been piling up in the build out of that hydrogen infrastructure. CapEx topped out at nearly 6.8 billion this year. Now, Air Products has been scaling back on this, so it seems like maybe this CapEx will start to decrease a bit going forward as they let off the gas a little bit on this hydrogen build out. But nevertheless, you can see here the spending getting quite high. And if you've been following us for the last 2 years, you might see this chart and think this looks a little bit familiar to another business that we've actually bashed a little bit, Texas Instruments, with their CapEx ramping up. So you can see, especially in the last 2 years, the CapEx ramping up quite a bit for the hydrogen business. And all of this creates some questions on whether or not Air Products stock is a good value worth buying right now. In the green line there, the forward expected price to earnings coming in at about 23x as we record this at the very tail end of 2024. Doesn't look like such a cheap price like it was early in 2024, the last time we added to our Air Products position.
Mantle Ridge does think that Air Products is at a good valuation if they get two things under control. The first thing is the capital expenditures. The second thing is being more diligent with their hydrogen spending. These two factors are, of course, related. That CapEx expenditure is primarily going to hydrogen infrastructure.
Here are Mantle Ridge's proposed nominees on the right, and those board members that they would like to see removed on the left, including the current CEO. And all of this is being spearheaded by one, Paul Hillel, the founder of Mantle Ridge, and one of the nominees for Air Products board of directors. And they're hoping to get Seifi Ghasemi replaced as the CEO with their own nominee, that if they can get the board effectively shaken up, they think they can get a new CEO in. And just a couple of points here that are worth bearing in mind that you can find some more depth to over on Semi Insider. Mantle Ridge was formed back in 2016 after Paul Hillel had a stint at Pershing Square. Perhaps you've heard of Pershing Square and Bill Ackman, the activist investors over there. Interestingly, it was Pershing Square and Paul Hillel that were involved with the last shakeup at Air Products almost a decade ago that got Seifi Ghasemi in as the CEO. So this is all just a lot of corporate intrigue. One of Air Products' arguments is that Mantle Ridge doesn't have the greatest of track records when shaking up corporate boards of directors, doing this corporate activism. One example they mention is CSX, the American railway company. Mantle Ridge, shortly after its founding in 2016, bought CSX stock, got an 80% increase. However, that was when CSX was coming out of an industry downturn in 2015 and 2016. At any rate, Air Products likes to point out that Mr. Hillel remains on CXS's board of directors. Not much has happened for CSX in the last 5 years. Of course, the world has changed a lot because of things like the pandemic and lockdowns and all sorts of business disruptions. But Air Products would like everybody to just vote to keep things the same because they've acknowledged that the hydrogen project spending was out of control. They've reduced the capital expenditure outlay for the next couple of years to get those costs back under control and boost profitability for what they've already built and put in place on the hydrogen infrastructure front.
Part of the argument that Mantle Ridge has stated is that they feel like Air Products has underperformed the last 5 years. If you zoom out to 10 years and take a look at some of the other peers against Air Products, you can see that things aren't quite as bad as Mantle Ridge maybe makes it out to be. Linde has outperformed its peers by a pretty decent margin. A lot of that has to do with the fact that they merged back in 2019 with Praxair. Linde now merged with Praxair, focusing on industrial gases, which have done fantastic in the last few years. Let's wrap this up and talk about whether or not we're going to be holding Air Products in our portfolio. After all of this confusing discussion, I feel like maybe this is one I'm ready to let go.
I agree. We were happy to keep holding after they offloaded the liquefaction equipment to Honeywell a few months ago. But the last thing that we're interested in holding on to is a proxy war between an activist investor and a management team that, in our assessment, has been doing a fair job, but clearly maybe doesn't have tight of control over the business as they should. Yeah, I think probably our capital is best used somewhere else. And we're up in total on this position 40% from the last buy early in 2024. I don't know, 30% overall total return in the roughly approaching 2 years that we've had this one. And there are probably just better places for us to stash that cash. It's gotten too hard.
This one's gotten too complicated for my taste. Thanks everybody for watching. If you want some more nuanced discussion about this, check out Semiconductor Insider. That membership is available on our Ko-fi page. Link in the video description below gets you access to that. We'll see you all again very soon at Chip Stock Investor.